Reasonable cause works when the IRS establishes the penalty and interest based on the sale of a primary residence. I had a client who lost his wife, sold the property, and never filed his tax returns. That 1099-S that the county gets for the sale of the residential property got sent to the IRS. So he owed somewhere over $243,000. He didn't owe that really. We just had to file the tax return, and then we had to submit it to the appeals officer to be able to examine it. So we had to go for the second swing, but we got it through.
Here's an example where it never works. It never works when you're habitual. So you don't file tax returns for 4 years in a row, and the IRS assesses late filing penalties, late filing interest. Unless there was something that you were in a coma and someone else is now filing these tax returns on your behalf, but pretty much short of that, that's going to say you're habitual. And even if it was a great reason for 1 year, they're going to give it to you for no years.
And Mike brought up an interesting point. That's another reasonable cause. When you're looking at reasonable cause, medical reasons, the C word, cancer, can also play a role. So if there's an episode of cancer in the family, or you have cancer and it really holds you back from fulfilling your requirements to file your taxes, that is a reasonable cause, as well as a death of an immediate family member. It can't be your uncle because that's a little too distant, but there are other reasonable causes that you don't necessarily have to cite the code and the law and tax court cases, but you do have to have that substantial proof in terms of death certificate and the obituary listing.
Here's an example of where it doesn't work. You give all your tax documents to a tax practitioner to file your return, but the tax practitioner does not file your tax return. You never sign anything, it never gets filed, and now you owe late penalties and interest or many other types of penalties and interest on this return. Ultimately, it's your responsibility to file that tax return on time. So if you don't do it and you know your stuff is sitting in a practitioner's office and that return didn't get filed timely, you owe that tax. You're ultimately responsible for it.
But in the same breath, I'm going to say there are ways for you to take that filing. So say it's a W-2, you've given all the information to the professional tax preparer to do the work, and then they didn't do the work, and they were waiting on something, but I didn't do it. If you get a notice of deficiency, a statutory notice of deficiency from the IRS on this issue, that is a doorway into filing a U.S. tax court petition and challenging that negligence or disregard for the law, failure to file, and failure to pay penalties, and poof, it can all be gone.